What up? What up? Top of the morning. It's your man Don Bucks. And this is Cheef and Sharp. Brought to you by Rapping Dough, the Home Money Conversations and Solutions. This is your first time tapping in. We talk about options trading on this chat, on this particular show. Options trading, the ideology behind the plays, what I see, what I don't see on the chart. And this is not financial advice. This is educational purposes only. This show is dedicated to the options traders who want to sharpen their skills, get more confident, and find a high probability trade, which is what we do here. And that's only what we do here. We take high probability trades. Right. Before we get into that, make sure you hit the like, subscribe, notification bell so you know when your boy going live. I look to be on here every day, but sometimes life be lifing, and I be having other shit going on, you dig? So make sure you hit that notification bell. So if you haven't already, grab my free checklist. Make sure you do that. It's in the description of this channel. It breaks down what I look for step by step, what I look for in a trade. And you're going to get that today and every day. The same thing over and over again. That being said, trading is not exciting. Like, there's not a lot of action. There's a lot of patience that's required. A lot of patience. I mean, some people have patience, some people don't. Like, that patience derives from knowing what you're looking for. If you don't see it, you wait until you see it. And some people have an issue with that piece. Like, the market is going to do what it's going to do. So we put the odds in our favor by looking for certain things. And if we don't see it, we're supposed to sit on our hands and just watch. Action, action in options trading. The action is when you're watching the adult trade that you took from a high probability situation, watching the bread run up. That's the excitement. That excitement is going to come from patience and taking high probability situations. So with that being said, what is the SPY doing? And the SPY is the stock ticker for S&P 500. S&P 500 is an ETF that houses 500 best companies on the market. So you can pretty much say that represents the American economy. And you have people saying, "Oh man, what if the stock crashes or zero?" Like, I don't think any dope company in America is going to go to zero without you knowing it well before that happens. The whole market going to zero, you might as well just say it's the end of the world. This thing was built to go up, basically. That's what I'm saying. Long term, educational wise, patience wise, we're going to win. So, that being said, what the market is doing right now, according to the SPY, according to our parameters, the MACD, right, our Bollinger Bands. Let's make this a little bigger for people. So, boom. What do we have here? We're above the zero line, but we're approaching the zero line, right? We're approaching. But we have this fast blue line crossing under the slow line. We're above the zero line, the midline of the MACD, but the crossing down of this fast blue line is not a good environment for swing trading because we're in a positive territory being above the zero line. But we look for the fast blue line to be above the orange. So across below, we have what we have here, downwards momentum. Right? Trading in a range of sorts. Not necessarily going up, not necessarily going down too much. So it's like choppy. So what do we have here? We have a bounce going on, a bounce from yesterday. Price dropped below a level. So right now, today is looking like a day trade for puts because we have a momentum divergence. Downwards momentum of the slow, the fast, it's a fast line. After it went down and broke a support. So now if you're day trading, which we're not, I might as well just tell you about it. If you're day trading, you're looking for a green bar that's going to test this level that just got broken. So you take that green bar and run it to the next level down. That's how you do puts with the momentum divergence to the downside. So that's what's going on today. People will probably be day trading puts today because that's what we have going on. Nothing for the long term, like weeks out, but something for the day is on the menu. So your stock is probably going to be looking like this. Probably broke a support and it's probably testing it now. So it's right at it, and now it's rejecting. It's rejecting that level right there. Possibly. I'm just saying. That's what it looks like. That's what it's adding up to. It's a momentum divergence to the downside for day trade today. So we have 2 minutes to open. Just for transparency purposes, I'm not taking any new trades today. I got some stuff I have to do this morning, so I'm not going to be sitting in front of the computer exercising any patience today. But we are opening up from yesterday. Opening up. So we had calls, playing the bottom of this Bollinger Band. Some folks definitely had calls. That's why I was running up this morning. Remember, the parameters of being outside of the Bollinger Band. It will come back in. Whether it's up here or down here, it's going to come back in. So a lot of people played that yesterday. Played that bounce. And now people will be taking profit and getting on the other side of the trade. Because this level is going to be tested with a green bar. It's going to be a green bar. I'm going to sit here and show you how it's going to look in real time. See, look, boom, the green bar. So green bar, and then which is the test of the level. See, it's the test of the level that's going to be rejected. High chances of it being rejected. So look for a green bar and a trading time frame. Somewhere it's not in 2 hours, even half an hour. Folks are taking profit. They played that bounce. So folks are taking profit. You might find a green bar in there. Might make it Opportunity to find one. There we go. So we'll be taking that green bar to the next level down. If I was trading the SPY, the next level down would be 444. So let's see if it rejects. Green bar testing the level that was broken. Support. The support is broken and becomes overhead resistance. This is overhead resistance. Support. Now it's overhead resistance. So let's see what happens. Reject. Like we're thinking it is. Is it going to reject? We shall see. That's it. The market will do what it wants to do, but all we can do is put the odds in our favor and have patience. Do the same thing over and over. Great, where's it going? With a pin at the top, so it went up, came back down. See, this doesn't get rejected like we think it's going to get. Rejection. See that pin forming at the top? Up there and came back down, being rejected. Price went up, it comes down. And that's how you get the skinnier, it gets skinnier and skinnier until it becomes red. The next bar will be red. Let's drop down. See inside. Now remember, on the daily, it's still above the zero line. So it's not going to go down much. It may just chill right here. You know what I'm saying? It might just chill right here. Uh-oh. Weekly, we're still above the zero line, and the blue line is above orange line. So we're poised for upside longer term. This is short-lived. This downwards drag right here, this is short-lived. This is going to occur soon, probably next week. By the end of this week, I believe it's going to curve back up. Right now, it's sitting here at this level. See what's going on. Right there. Shit, man, I gotta go. It's crazy because I sat here and been on my mind to do. But I let my damn registration expire. Steady driving around. Expired registration. That first thing in the morning, get that taken care of. Can't riding like that deer. I remember from previous lessons that the older time frame holds precedent over the shorter time frame. So we're looking at the weekly. This holds more weight than the daily. Right? The daily holds more weight than the 2 hour. So we have to have a base time frame that we start from. 3 total time frames that we're going to be comparing. So you're going to have your base one, right? Set your levels. That's going to be the one that holds the most weight. You're going to have to be able to gauge what you're trying to do off of what you see off of your base time frame. So if your time frame or your trading time trading time frame in the sense of how long you're trying to be in the trade, that will determine your base time frame. So if you're trying to be in a trade for a year, you want to look at maybe the weekly as your base. Right? Okay. This is 52 weeks in a year. 4, 2, so you're getting a 2-year contract, you hold it for a year and a couple months. You might want to look at the weekly as your base. So all time frames matter. You know what I'm saying? They all have their importance. If you have a general understanding of what you're looking at, you're going to be able to put it all together. Right. So here, what do we see? We had momentum divergence last week. Blue fast line above the orange in a red bar. People were buying this that had a longer term view. He said, oh, we're about to buy this. It's divergence. And look what happened this week. It's responding to the momentum divergence. So once we keep seeing the same thing over and over again, we can start making intelligent decisions. So boom. We're swing trading. So we use the daily as our base. Or we could take a peek at the weekly. Like, okay, what is the weekly saying in regards to my daily? Okay, poised for upside. Right? Okay. Poised for upside. So then I can be like, that's how I know this downward drag right here is short-lived because what's going on in the weekly? The weekly holds more weight than the daily. So the weekly is saying we're still looking good, but the daily is saying, oh, we're chilling right now. That's just simply it. We're chilling right now. So you might have to put a little bit more time on your contract, basically, in order to get this time to go back up and get in tune with what the weekly is saying. Hope this is making sense. So we took a peek at the weekly. It's like, oh, it's longer term reports for upside. So that means that this is short-lived. We can wait a little bit. Wait for this to cross back up, which it will soon because of what we see on the weekly. Right? Right now, this is day trading material, but I'm not even good off that right now. Once this blue line crosses back up, we're gonna start talking about plays, swings. We're already in a couple. We're already in them. With time on the contract, so we can wait this out. We're not tripping. That's the benefit of having time on your contracts with situations like this. We know we're poised for upside based off what the weekly is saying. But right now, we have a temporary consolidation, trading of sideways. You got time on your contract. So we in Nike till January. We're in Target till January. Those are a few weeks that we're in. Seeing what's going on weekly, upside. So whatever's going on in the daily is short-lived when it's down. As far as going down, I'm not even worried about that because I see it on the weekly. So I got hella months on the contract. So we got time to sit and be patient. It's your man Don Bucks, man. Hopefully you hit the like subscribe button already because I'm giving up all the sauce. You know what I'm saying? Uncut. Also make sure you hit the description of the channel, grab your free checklist. And if you need more than that, take it a step further and get that course. Taking the frugal route. In fact, you need get all the people you can. I'm on here every day saying the same stuff that works. So watch the videos over and over. Get the course, watch the video over and over. Start practicing this shit, man. So it's not hard. Get money with me. It's your man Don Bucks, man. See y'all tomorrow.